All right, Evan, what questions we're going to knock out today?
Another Q&A. Ben, the main thing that I really would like to go over this week is taxes. So over the last week or two, I've been speaking with some of our Alpha members and offering sort of some free tax reviews for this previous year that most of us just filed. And the most common question is, well, what are some of the errors and flaws that Ben and Skender, our tax professional, have found? So would love for you to go into detail about that and see what we can find.
Yeah, so the biggest thing that is going to be the income savers tax credit, which is for, let me see if I can pull up like the, hold on, screen that goes into this. Give me 1 second. Okay, so I'll just use this for now. Okay, so income tax savers credit. The income tax savers credit. Okay, here we go. Retirement savers contribution credit. This is for those that contribute to a retirement plan who are older than 18, not a student, not a dependent, meaning they're not dependent upon their parents, if they're not on their parents' tax returns, and are working. And that's if they make any contributions to a traditional IRA, Roth IRA, even something like a 401k, things like that. And you can get credits up to 50% of the contribution, which the big trait, most people initially go to pre-tax, one, because it's the preset option for most plans. But second is the assumption that they're saving more on taxes initially, which is the case, but in the long run, you end up paying way more. With this income tax savers credit, you get the credit for the Roth, which gives you that same benefit as a pre-tax, as well, also giving you that longer term tax benefit. Now, it can be a little misleading because it says they'll give you a credit up to 50%, but me and Skender kind of ran the numbers, and it would be almost impossible for someone to really get that full credit, meaning that if you put $6,000 into your Roth IRA, you would get a $3,000 tax credit on your tax return. But it was very hard for us to find anyone to do so. And if you see on this page, this kind of like briefly explains it. So for someone to get that full credit, they'd have to be married, making no more than $41,000 in a year as a couple, and then also saved $6,000. So it's a very specific household that I'd be hard pressed that there'd be many that fully got this contribution. What we saw though this year, a few members were kind of in this 10% and 20% bracket where they might have maxed it out and got, $500 or $400 in this like 10% bracket. So that's more of what we saw. We've seen most people kind of in this area, the under 68,000, above 41, or if they're single, under 51,000, kind of like first year of college. That's the typical person. So if you file the tax return this year, you're kind of first year of college, you're making less than $50,000 a year, and contributed to a retirement account or 401k, you more than likely didn't get this credit because you didn't know how to file it on your tax return. If you did it on TurboTax, without a doubt, you missed it. And if you had like a tax preparer from like an H&R Block do it for you, he or she more likely missed it. And that's for the members that we did the returns. Everyone got them, or if they were over the income limitation, they didn't get it because they weren't eligible. But we did reviews after tax season for members who didn't do it with us, and it was like 50-50 between like some members got it because the taxpayer did it, and some missed it. And at that point, like this point, for most, when we ran the numbers, it like didn't make sense for us to amend the returns because the cost savings versus the cost to actually amend the return didn't make sense. But this was probably the biggest thing, was the savers credit for those who contribute to retirement accounts that are making under $68,000 a year if they're married, or under $51,000 if they're single. That was the biggest one for this year that most kind of missed out on. And also like the other one was getting the stimulus checks. I know there was one or two members who like didn't get them, and then we were able to like get them. The stimulus is like added on to a refund check. But those were kind of the two main things. So again, in short, at the end of it, if you did file your tax return this year and it was annoying, or you weren't happy with it, or you do want a second opinion, you can just DM us on Instagram and say tax, or message myself or Heaven on GroupMe and just mention the word tax, and then you can schedule a time to talk with Skinner and myself. And all we'll need is a copy of your most recent tax return. And then when we go on the call, you, Skinner, myself, we can all go over the tax return and figure out if it was done right, or if there was things that could be done better for the year ahead.
Perfect. Yeah, I mean, seems like a pretty simple but hidden little thing that can get you a little bit of money back, especially if, like you said, brand new, out of college, not making a ton of money, but you can get a nice little credit if you're putting money towards those investment accounts.
Yeah, we had one member who went with somebody else, and he paid like, I think it was like $65 for a return, which was like insane, because for us to even file a return cost almost double that, just from the fees, just to like e-file. But when we looked through his return, we're like, you paid like a $700 penalty, because on your return, it shows that you contributed $12,000 to your IRA, which means you over contributed, which you shouldn't have done that. And he's like, I didn't contribute 12,000, I only contributed 6. And we're like, well, then your person who did it made a mistake, and they need to like amend this and get you that money back. And you reach out to the CPA, and the CPA just like made up this like blatant lie that for whatever reason, even though he only put 6,000 and told him he only put 6,000, he had a reason of why he had to put 12,000, which is just the guy made a mistake and didn't want to like admit that mistake. And even on our end, it was like, it wasn't worth us fixing that error. But for him, it was very clear that like, you paid for the service you get, and pay $65 for tax prep, you're not going to get the service that you need. And that's things that people try to like cheap out on. But if you can save thousands of dollars, or avoid you overpaying $800 and not even noticing it, obviously it's better to get the right advice and the right help.
Invest in the right people on your team. Even if you have to pay a little bit more, it ends up saving you a lot more in the long run.
Sure. So that's hopefully, I think we can wrap up the tax stuff. Was there any other questions you want to go over?
Some people need a refresher, and it's just kind of placing those orders. Someone in step one was just having some issues with that with their broker. Obviously, every broker is different, but they're all pretty similar if you want to just show somebody how to put in a buy stop and a sell stop.
Yeah. So again, every order box, you can see the screen here, is going to be the same, unless you're using like Interactive Broker or TD, Thinker. So many will use like the cool little black screen, like the little like upsells. You can use that. I personally don't. I use just the regular order box, the old school way that every single broker is the same. For TD Ameritrade, it's like on the bottom of the screen, it's like their little snap ticket, and you click it and the screen pops up. But again, every broker, Vanguard, TD Ameritrade, E-Trade, Webull, the order box is the same. You have your order type, you have your symbol, the action, buy, sell, etc., quantity, order type, time and force. So the main things for most, I'm not going to really explain the obvious of putting the symbol in or putting in your quantity or buying and selling. If you can't figure that stuff out, God bless you. The biggest thing really is order type and time and force. Those are the two big things. We are big on stop orders. So on this little drop down, it would be, market buy, market sell, limit buy, limit sell, stop buy, stop sell, limit stop, whatever, limit buy, stop. We always use stop orders, which are basically orders that will trigger at the entry price and become market orders. So for this order type, I put the drop down, I put buy stop, the stock's trading at 100. I want to buy it at 102. I want to buy it above the market, put my order in, buy stop 102, and then time and force. I typically put good to cancel. That, in this example, it shows just day. So obviously for a day order at 4 o'clock, if it doesn't trigger, the order will automatically cancel. And if you put good till cancel, again, some brokers are different. Some it may be 60 days, some it may be 90 days, where it'll stay in the system. But again, I always use good to cancel because I'll leave the order in, because I'm not really planning my entries for that specific day. It's more so when the stock wants to trigger, I want to be involved. And then at a later date, if the stock is no longer setting up in the way that I like, I simply go into my order status, I hit cancel order, and that's that. So the main thing really here, every broker, every order box is the same. In the beginning, most want to use a Thinkorswims or whatever E-Trade uses to give you like that black screen, like what Shake's computer looks like during the chart talks, but you don't need that. For them, it's more marketing. It just looks more Wall Street, like looks cooler, but you don't need it. Simple order box, you put your order in, you hit submit, and you're done. And that's the easiest way to go about it. And it avoids a lot of mistakes. It's a little difficult to keystroke on an order box because TD knows this. And like, if you put, you hit this snap ticket, pulls up the window, and you put buy, you put your information in, and then you change the direction of the market or the direction of the order from say buy to a sell, it's going to bring the window back down and force you to open it back up. And then you can often that you'll catch your mistake where talk about hotkeys, when me and Shake used to trade, it was like on your keyboard F1 through F12. So F1 would be market buy, F2 would be market sell, F7 would be the buy stop order. So we would be pressing these keys and we can put our orders in very quickly, but you also can make a bunch of mistakes. So I don't think most members are using hotkeys anyways, maybe other than Shake. And it's again not necessary. Regular order box is going to be fine for 99% of people, myself included.
Yeah, a common misconception that I also noticed is because like when you in this type of page where you have like the action is a buy, the order type will still be called the stop loss, which can be kind of confusing because we teach people as like there's the buy stop for buying and then there's a stop loss for selling. But when you're looking at it this way, you have to understand that the order type is stop loss, but if the action is a buy, that means buy stop.
Yeah. So even with buy stops, very very simply, if we're going to pretend that my hand is the market price of the stock, buy stop is above the market. So the stock's at 50. Your buy stop is going to be above the market, above the price it's trading at, and then a sell stop is a below the market order. Meaning if the stock's at 50 and you have your stop at 45, once it gets to 45, that order will trigger to a market order and automatically get you out. And conversely, if you got a buy stop in 55 and it goes to 55, that's when the order will trigger. And then buy stop limits, I would highly recommend not using them unless it's around earnings season and you don't want to get caught into a gap up on the way down. I could really never think of a reason why you'd ever want to limit your exit on the downside, but they have to give you those options. But I would steer clear of the buy stop limits and focus on the simple just buy stops.
Yeah, Jason just joined. Jason, do you have any questions for Ben?
No, I'm good over here. I just like.
Cool. Evan, I think was it just those two for today?
That's what we got.
All right. Well, Jason, I know you jumped in a little late before you got on. We went over some tax stuff, and then you kind of hopped in halfway through the questions. But again, in a few minutes, this video will save. I'll upload it, and then you can catch the beginning part of it. And if you do have any questions about your tax return or you need a review, just let me or Heaven know. You can book a time with Skinner and myself, and we can take a second look at your tax return if you need any advice on it.
Yeah, sounds good.
All right, guys, you guys have a good rest of your day, and talk to you guys soon.